Welcome back to Investing and Trading Live. Once again, I am your host, Josh Lilquist. On the last segment, we had some blockbuster earnings this week, especially with the retailers. We talked about Kohl's seeing a drop of about 25% after their earnings miss. You have Best Buy increasing 10%, Dick's Sporting Goods up 15%, Salesforce was down 17%, and I believe Foot Locker was also down. So retailers was kind of a mixed bag with earnings this week, which what actually was the headline on Thursday from MarketWatch. It says Salesforce factors 300-point Dow skid on Thursday, right. And that was the news from MarketWatch.
Yeah. Well, and here's the point: people are going to go, "Well, wait, Salesforce was down how many dollars?"
Let's take a look here. So Salesforce ticker symbol is CRM. Was down. Bear with me while I'm looking for here. Here we go. It was down $52.
Okay, it's down $52, but its impact on the Dow was over 200 points. See, there's a multiplier. So every dollar that something goes down or up in the Dow is multiplied. I think it's by 6 point something percent. So 6.6 times. So you get that multiplier there. So stocks like Salesforce, Boeing, these companies have had a huge impact on the movement of the Dow when they have had $5, $10, $20 movements in their stocks. So that's why we see such big numbers in the Dow. But you mentioned a couple of things I think that are really important. We talked about the retail sales, the retail reports. I think most of the companies that you mentioned were up, with the exception of Kohl's, which shows that the consumer is still strong. They're still spending.
Still spending.
That's exactly what the Fed does not want to see. They want to see that brought back. The strength of the economy, the strength of the consumer is one of the things that is keeping inflation from coming down where they need it to.
And then just kind of thinking about human nature right now, too, I think it's going to be very difficult to stop the people to spend. I think no matter what the Fed does, it's going to be difficult for them to stop people spending money because it's kind of an addiction after a while.
Yes.
People are spending what they don't have, and people are spending what they think they might have in the future. But there's problems with that, but you don't really see that, and it's not really, it's talked about on TV and the news and everything. But people's pocketbooks are getting smaller and smaller and smaller. And that's why it's so important to know how to use the market to create something.
Correct. What's happened, I think, with the Fed injecting so much money into the economy and after the pandemic, all of the pandemic money that went out to the public, they got used to spending money that they didn't have before. They got used to spending money that they weren't spending when they were kind of in lockdown.
It's like that lifestyle. People live a certain lifestyle, and you can't go down from it.
You get used to You get used to that. So now what people are doing, even though they might have run out of the money that they got, the pandemic money, now they're using their credit cards. Credit card debt has hit another record. They're also borrowing money from their retirement accounts. So
I spoke with a lot of people. They had to deplete their retirement account because they were spending too much.
Right.
And it probably was unfun stuff, which you have to have some fun. Yes, I do agree with that.
There's a lot of great fun things out there that we want to own, and people got used to buying those things. So here's a great thing, though, Josh. If you have an additional source of income, if you don't just have to rely on the income from your job and maybe what the government has given you, which is a short-term burst, but if you have additional sources of income, not additional jobs, you don't have to worry about hitting your credit card. You don't have to worry about taking money out of your retirement accounts. And how do you do that? Well, you do it by learning how to use different parts of the market, because there are certain assets that are perfect for short-term income. You mentioned before, I think you said something about the school systems, kids not learning in school.
Correct.
Here's a shout out to Eden Prairie High School. Yesterday, Kevin and I did a presentation there for a class, and here's a shout out to Miss Ewing's class. She is teaching these kids how to invest. They were the subject matter that they're covering now are futures and options. And when I started out, the first thing I said to these kids is, what you are learning right now may very well be the most important thing that you learn in high school. It's something that you can use for the rest of your life to put yourself in a position where you have a much better chance of creating wealth. You have a much better chance of generating additional income. So when you go out into the workforce, maybe there's a job you really love. Maybe you have a passion for something, but the income isn't quite there. Well, if you have an additional source of income, and you can do that with the markets, you can do it with options, you can do it with futures, you can do it with the foreign exchange market, maybe some real estate. Those are all ways of generating additional income without having an additional job. But if you can do that, maybe the amount of money that your job or your career pays isn't as important. You can kind of use the market to maybe fund something you really want to do, you have a passion for. Because if you are just graduating, whether it's from high school or college, and you're going to go out and start a career, you got maybe 30, 40, maybe 50 years ahead of you to do something. And being able to do something you really enjoy and not have to worry about the money part of it I think that's a good combo.
Yep, and I think on the flip side of that, it's never too late, because you get people that, people sometimes don't really think about it till they're 40, 50, sometimes even 60 years old. So it's not too late, because if you think about this just for a second. You're 50 years old. Let's just say you have a 50-year-old listening right now, which there's probably thousands of 50-year-olds listening right now. You're at almost
maybe
at halftime.
Millions.
Yeah, well, maybe millions, yes. You're at halftime. You have almost half of your life to live. Why not learn those skills? Why not see what's available? But it does take a little bit of action, and sometimes when you get 50 years old, you're like, yeah, I'll get at it later. Well, now is the time. So I want to invite people to take that opportunity to learn what's available, how to have an opportunity for income strategies, how to have an opportunity for wealth strategies during those retirement years. So to come into an investing class here in Bloomington or all across the metro, we have these classes to introduce you to these techniques and concepts that are designed for that. So simply just text the word investing to the number 210-210 right now for 2 seats for an investing class, no matter what age you are, because it is never too late or it's never too early, but you do have to start. Text investing to the number 210-210. So Al, you mentioned you were at the high school and talking about they were teaching or introducing the concept of futures and options, which are great income strategies or income assets, but you need some capital to do that. So let's talk about why you can use a smaller amount of capital than most people think, because if you trade stocks, you need really a lot of money because it ties up all the capital. Right. So let's talk about how that leverage works so our listeners understand, yes, you can get involved with smaller amounts.
Yeah, and you used the word that is important there, and that is leverage. Before I talk about that, by the way, I just want to address that age thing that you mentioned. You said if you're 50, maybe you're at halftime. Mm-hmm. Well, let's say that the Vikings or any good football team, it plays 4 quarters. Do they quit at halftime? Do they quit after the third quarter? They play right through to the end of the fourth quarter. So if you're 70...
But at halftime, they're preparing for the next half.
That's exactly right. And it may be different than the way they played the first half.
Yeah.
But here's the point. We have people that come in that are in their 70s that say, gosh, I wish I'd done this 10 years ago or 20 years ago. I'm just too old to do it now. That is exactly the wrong thinking, because it's a lot of those people, when they're now in their 90s, are going to say, gosh, I wish I had done this when I was in my 70s. Yeah. It is not too late. But when you're in that age range, when you're retired or getting close to retirement, and maybe you don't have enough, you feel, to comfortably make it through retirement, what do you do? Because the income from your job's gone, unless you want to go out and get a job at 70 or 80.
Yeah, you could go do that. That's an option for people to go out and maybe work construction or something, or do some concrete. That'd be a great opportunity for them. And
you know what? If you want to work because you want to get out and kind of socialize with people, that's fine. If you do it because you want to, that's one thing. But if you do it because you have to, that's a different thing. But if you're in that age range, you need to, and you're not where you want to be, then it's kind of, you have a shorter time period to make things up. In other words, you don't want to put something together that you can count on in 20 years. You want to wait until you're 90 to benefit from dollars you have today. So how do you do that? How do you be able to use a dollar today and have it be multiplied and compounded to something great that you can use in a short period of time? You use leverage. Everybody knows about mortgages. If you want to buy a house, you don't have to have the full amount of the value of the house. You can take out a mortgage. It's maybe a tenth of that. Well, you can do the same thing in the financial markets and options, futures, forex. Those are great leveraged assets, which means every dollar that you have in an account will actually control something that could be somewhere between 10 and 100 times that amount.
So let's talk about that for a second. The foreign exchange market, is better known as the Forex market, has 50 to 1 leverage.
Correct.
So let's just say somebody has, let's say $2,000.
Sure.
What does that control at 50 to 1?
You potentially could control something worth $100,000.
So that buying power is phenomenal there.
It's huge.
You probably won't use that whole thing, but it's available to you. Right? Futures, up to 20 to 1 leverage. So let's just say someone has a $5,000 account in the futures market at 20 to 1 leverage. What could that control?
You're looking at $10,000. If you're looking at 20 to 1, you have, how much did you say?
5,000.
5,000, okay. Yeah, that's
100 grand.
That's 100 grand.
Yeah, 100 grand.
Yeah.
Yeah, 100,000 at 20 to 1.
Great.
Yep. So the opportunities are out there. It's just a skill that you need to learn, but it starts with learning these concepts and techniques.
Yeah. And by the way, you probably have realized by now that we're not math geniuses.
Hey, no,
Okay.
we don't have to put that out there for everybody.
You know what? We don't have to be math geniuses.
Let's address that.
All right.
Because sometimes people come to the academy like, I don't have a finance degree, I don't have an accounting degree. How can I learn this? Well, I can tell you what, if you're better off not having that, because for one, the computer does it all automatically for you.
Yeah.
But it's just training a process is all it is. And you don't have to have a math degree, a finance degree to be in the markets. You just have to learn the skill, and it's a skill that can be built.
Right. Well, all of those things that people think they need to learn, they think they need to know the math. They think they have to have this great amount of knowledge and wealth to be able to do that. You know what? You don't, because somebody else has already done the work for you. All the math, everything that needs to be done has already been done by the smart money, by the big Wall Street players. So if they've already done that, and by the way, they can do it at a much deeper level than you can and much more accurately than you can. So if they've already done it, why not just benefit from the moves they make off of all the analysis that they've done?
Here's an example to that, because they're doing the financials, they're doing the math on everything, and they're also moving price. So think about it when if you've had a child that if you're listening, you've had a child and kids are learning how to read. How do they start? They're looking at books, but they start with looking at pictures, because you can identify and determine what's happening pretty good based off of pictures. That's what trading and investing is. You're looking at a picture, which is a price chart.
Right.
It's not a whole bunch of numbers. It's not a whole bunch of algorithms or formulas. It's a picture. And that's what you just need to look at to read, but identify what that picture represents.
Yeah.
And that's what we teach in these investing classes, is what those concepts are. How do you look at a picture and say, this is what this stock is doing right now. Here's what it could potentially be doing in the future. Then it's just a process. And once you have that process down, you just follow that process, which does take a little bit of discipline. So if you're listening right now, if you feel like you have some discipline, if you can follow step-by-step processes, and you can be decisive, essentially just click a button. I mean, once you have a process and if you followed it, it's a lot easier to click that button, builds that confidence to do that. That's all trading and investing really is. So it's not rocket science. It's just a skill that's able to be built, but it takes a little bit of practice to do that. We reference the Minnesota Vikings, and they don't quit at halftime, although sometimes it looks like they do. But we're looking positive for the year this year. But any athletic team, they don't quit at halftime. They build a plan for that next phase. And that's, I think, what I want to encourage our listeners right now is to do. No matter what age you are, if you're in your 30s, 40s, 50s, 60s, 70s, build a path for that next phase of your life. So that way you can live how you choose to live. Starts with an investing class to see what these opportunities are in the markets. The markets are never going to, can't say never, but it's possible they will never go away. And they're always going to be available to us as an opportunity to have an income strategy or a wealth strategy. Come into one of these classes just by simply texting the word investing to the number 210, and that's for 2 seats for you. So when you text in, you're going to get a text right back with a link that's going to be right to our landing page. You can pick your own date and time, and location. We're doing these classes all across the metro. Simply text the word investing to the number 210-210 right now. Also, subscribe to the podcast. We appreciate our followers and listeners. Coming up next, let's talk about those leveraged assets, using those in retirement accounts and opportunities moving forward as well. This is Josh and Al, Investing and Trading Live. We'll be right back.